Michael, give me two truths and a lie, please, sir.
That's interesting. I really enjoy workouts at least 3 days a week. I have been to no less than 40 states in the US, and one of my favorite meal is a burger,
Is a what?
hamburger.
Hamburger. Yeah,
Hmm.
okay. All right. So you're working out at least three times a week. You've been to 40 states and you like hamburgers. Okay. All right. Hmm. I don't think you like hamburgers, Michael.
You got it.
What's 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 the problem with burgers?
I'm a big health person when it comes to what I eat, and I just feel like the meat is not high quality grade.
Good enough. Good enough. What are some of your favorite foods?
I eat a lot of salads, lean proteins, turkey, chicken. I try to really stay away from red meat.
Okay. So are you working out like 7 days a week, but at least three,
So
Michael?
at least 3 days a week.
Yeah.
Yeah.
All right. That's
that
awesome.
that's for sure. I can tell you full disclosure. I have not come out of my gym clothes before showing up here.
Well, it's an important thing. You gotta keep everything moving, man.
Yeah,
And 40 states.
yeah.
Is that on purpose or through work or
Um, it's not on purpose, but I think my wife and I we enjoy traveling, so that's something we do. Either visiting friends, family, work. Um, we like to we like to do a lot of that.
yeah. It's I'm a creature of habit, but then I also recognize that there's so many cool places to go. So I should always need to remind myself to go explore a different place. So it sounds like you're cut from the same cloth.
Yeah, so when you are a creature of habit, then it may be challenging for you to do a lot of traveling. I was talking with my trainer at the gym today, and she really hates traveling just because it takes her off her routine. So she was asking me, how do I do it? How come you're able to just travel? Because I was giving her my itinerary for the next 5 weeks. I'll be in California. From California, I'll be in Africa and then back. She was like, whoa, that's
It's freaking her out. She's like, "Oh my God, how am I gonna get all my
yeah.
food over there?" I bet she doesn't eat hamburgers either.
No, she doesn't. Definitely not. I know that for a fact.
That's funny. All right. Awesome. Well, Michael, what is top of mind for you right now?
Top of mind for me right now, like most people in my profession, will be the new tax bill, okay, which just passed July 4th, which is last month. It's going to be almost 2 months next month. So I think that's top of mind that most people really need to be aware of.
The whole thing, parts of it. How big?
Not the whole thing. I'm more focused primarily on the tax provisions there, but not necessarily everything on the tax provisions, but more on the things that business owners and entrepreneurs should really be aware of.
And were there a lot of, I'll be honest, I'm not super well versed in all those changes, which I suppose is why you're here, Michael. What are some of the top
Yeah.
things?
What was your question?
What are some of the top things that have been changed?
I mean, a lot has really changed, and I think business owners should really become aware of them now because it's already coming to the end of August and we close to the end of the year. I think one of the biggest one really will be what is known as the 100% bonus depreciation. Okay. It's a big one in the sense that um, for business owners who really understand how to leverage a lot of what the tax bill has provided, it's going to help them accelerate their journey to their financial freedom.
Well, that certainly sounds like a good thing. I want
Yeah,
some acceleration towards financial freedom for sure.
yes, it's very important because what the government has done with this new tax provision really is a situation where they are truly hoping that entrepreneurs and business owners will be able to use the tax provision to save on taxes and by extension plow back those tax savings into either expanding their business, hiring more people, or doing something to kind of enhance the economy. Because the big deal has been the critique that this administration has gotten from most people is like, okay, the tariff is a big thing. You're creating some wars with other countries. But on the flip side, the whole idea is to make the country become more and more self-sustaining into the future. And how to do that is to, first of all, generate your manufacturing base from inside the country instead of we being dependent and reliant on other countries.
So the tariffs have, at this point, seemingly been successful in what they were hoping to accomplish. The desire is to make the country more sustainable by bringing back manufacturing, and this 100% depreciation is in service of that.
Yes, so let's break that down. So typically, if you look at real estate as an example, the one of the big things that people rush into real estate all about is because you leveraging either the bank's money or some other people's money to grow your net worth, right? So if we take an example of a typical real estate investor, he or she may be putting 10, 20% down on a property, right? And borrowing 80% from the bank. But what does that do for you as a real estate investor? It puts you in a position where you now have a property for which you have only put 20%. Now, yes, the bank is getting interest income from the mortgage interest, but the investor who has only put 20%, he or she really gets all of the tax benefits from that 100% asset, which is the property. Okay. Now, this is the kicker. This is where bonus depreciation is a big deal. If you use the real estate as an example, typically, for a commercial real estate, the tax law says you can depreciate it or write it off. That is the depreciable portion over 39 years. If it's a non-commercial, over 27 years. Now, with this 100% bonus depreciation, you can do what is called a cost segregation on that building. And that will put you in a position where in the first year of your purchase of that real estate, you will, most cases, you will be able to depreciate even over and above what you put in as your down payment on that property. So really, you find the government really is reimbursing you or subsidizing you or actually really bankrolling your down payment into a property. So when you really zoom out from the big picture, you find that, let's say an investor puts $100,000, right, into a $500,000 property and gets the bank to finance the balance for 100,000. Now, that investor truly will be in a position where he or she is going to be able to save anything from $30,000 to $40,000 in taxes in year one in the purchase of that building. So that technically for the investor, the true net out of pocket that he or she has incurred in buying that property may not even exceed $60,000. So you find overall the idea is to make capital move in that direction where the government is wanting people to go to.
And is that exclusively for commercial properties?
It's for any business. I just use real estate as an example just because most people can connect to that. For business owners or people who have manufacturing businesses or whatever, it could be any equipment and stuff like that. You buy it, you finance it, whatever you're doing, you do bonus depreciation. Even for equipment, for example, you that is even more accelerated because The equipment does not have things like land that you cannot depreciate. So somebody can decide, hey, I need to expand my factory, whatever total amount of money they invest this year and get the bank to finance the difference. The totality of both the portion that the bank financed and what the manufacturer put in, all of it gets to be deducted in the very first year of purchase. So that's the very big thing that I think bonus depreciation has done in this new tax law. And I'm really encouraging most people to truly be talking to their tax advisors right now so that they can take advantage of that instead of people waiting to the end of the year and then they're doing this whole Hail Mary approach of trying to figure out how to reduce their taxes when it's like 1 week to Christmas.
Michael, that you're asking people to be proactive about things and to actually plan. I don't think that that's a viable thing. So just kidding. Just kidding. All right. So I'm a business owner. Does it, how do I know if I can qualify for this? I don't, if I'm not a manufacturing company, but I have equipment or
So let me put it simply this way. Anybody and everybody can qualify for this. Okay. You don't necessarily need to be in the manufacturing industry. If you are a business owner, as long as you are thinking of the possibility of, say, expanding your business, making some improvements, or whatever it is you're trying to do, right? This is the time to be talking to a good tax advisor, seriously. I'm not pitching myself. I think people truly need to understand what taxes are. The reality of what I find with most business owners, they have this love-hate relationship with taxes. They approach taxes from an avoidance perspective, meaning they shy away from it. They don't want to touch it until it becomes apparent, like 1 week to the timeline to file taxes. That's not a good way to go about taxes. For me, I consider taxes as one of the things that can make a business owner wealthy. It's really true because the way the tax code are always designed and written, it's designed for the entrepreneur. The tax code is meant for the business owner. So I see the tax code as a tool, not a trap. Most people think, oh, the government is out to get them by way of taxes, which is not the truth. The government is trying to design tax laws to shape entrepreneurs' behavior to drive capital the way the government wants it. And so every business owner who truly wants to get to financial freedom, he or she must be talking to a good advisor no less than 4 to 6 times a year. It's so important. You cannot be, in fact, when I see people come to ask or request our service at the end of the year, that's a lost cause. And that's why, for example, in our practice, we don't take on clients whose only service is to prepare a tax return because for us, that's like giving medicine after death. That's just a compliance thing. What we do with clients is you should be talking to your assigned CPA in your practice at least every month or no less than once a quarter so that there's kind of constant proactive planning and knowing how to make strategic decisions. Okay. The one thing I've found over 18 years of my life as a practicing CPA is the fact that the wealthy people never take their tax bill on the surface. Okay. They are very strategic in making sure that everything they do there is a tax optimization around it. Because if you really work and live like that as a business owner, what it helps you do is money that you otherwise would have given to the government comes back to you and gives you better cash flow to enhance or whatever you're doing to make you financially free.
is there a threshold of revenue or income that you say, okay, you're not quite there yet, or you're ready?
What do you mean by threshold of income? Are
Does
you
somebody need to
talking
be
of
making, if it's like a solopreneur, if they're making $500,000 a year, they qualify for this kind of planning, or is it
Absolutely. So again, it's not about how much you're making now, right? Yes, there are people who can come to us and will say, well, we may not be a great fit for you at this point because you don't really have much of a tax exposure, right? But into all what I'm discussing today applies to any person, even whoever it is that is just starting out in business, right? If you take a look at a building, every building literally have a blueprint before the builder goes to work. I mean, running a business, it should not be, oh, you should be making tons of money before you start planning out your tax strategy. Okay, that's such a very wrong approach and mindset to dealing with taxes. The way we deal with clients, we want clients to tell us, here's my wealth strategy. This is how I'm going to try and make money, or this is how I'm making money. And then the good tax advisor's job is to build around that wealth strategy a tax strategy that will help accelerate or fasten that entrepreneur's journey to get into their final goal. Okay. And like I said, every $1 that you send to the Internal Revenue Service that you don't need to send, that's $1 that is no longer working for you. And everything I'm talking about has to be legal, it has to be ethical, it has to be moral. I mean, I get blown away when people cheat on their taxes because, in my mind, there are just too many roadmaps, too many things in the tax code that a good tax advisor should guide a business owner on how to leverage those things as to get the results that they want to get.
I love it. That makes a ton of sense. It's a very, very human thing to say, well, once I start doing X, Y, or Z, then I'll start planning, then I'll start doing this. But to your point, that's flawed thinking. That let's start the planning process now. Tell us about your wealth strategy, and we'll build a tax strategy around it to help you to get there. I love it.
It's a very flawed thinking, and I mean, honestly, 18 years into practice, I can still say over 50 to 70% of business owners still work or operate with that mentality, right? They feel, oh, only the billionaires or the multi-millionaires really can use the tax code. And the reality is, the tax code, really, to be honest, is one of the fairest system of the rules and regulations we have. What do I mean by that? It's not discriminatory. If it's all about, okay, know the rules of the game and let the rules of the game work for you. So I typically say, if you want to get the things that the big boys have, you got to behave like the big boys. Behaving like the big boys means doing things the way the big boys do it because they've mastered that, right? The big boys have mastered it. They have in-house their own accountants and planners and all of that. So the idea is, irrespective of your income level or where you are on your entrepreneurial journey, you can be able to do the same thing.
I
Okay.
love it. Excellent perspective. Beautiful.
Thank you.
Well, Michael, you've given us a lot. We're ready for that difference making tip. What do you have for us, sir?
Ah, and I think I've said it before. I mean, it's not earth-shattering. Sometimes the simplest but most impactful thing looks too easy and be too easy to be true and good. But the answer is it's that, which is get a good tax advisor and go into being able to strategically use taxes as one of the pillars of growing your wealth. It's as simple as that.
Well, I think that is great stuff. That definitely gets it. Come on. Michael, thank you so much for coming on. Where can people learn more about you? How can they engage with you?
There are so many ways, but for the purpose of a podcast or a show like this, I typically just ask that people just shoot me an email just because there's somebody whose job it is to monitor all my emails and make sure that they are responded to. So the simple email address is taxes, T as in Tom, A as in Apple, X as in zeros, E as in Edward, S as in Sam, at smidcpa.com. S as in Sam, M as in Michael, double E as in Edward, D as in dog, C as in Charlie, P as in Paul, A as in Apple.com. If you shoot an email there, we'll definitely respond to you. Yes, because I appear on a lot of shows, a lot of emails come there, and my scheduler just get them scheduled. What we normally do is we do a discovery call, kind of get to learn about your situation and request at least the most recent 2 years tax return. And then when we analyze it, we come back to you in a second meeting and tell you what we think about your situation.
Beautiful. Well, if you enjoyed this as much as I did, show Michael your appreciation. Share today's show with a friend who also appreciates good ideas. Shoot Michael an email, taxes at smeedcpa.com, taxes at smeed, S-M-E-E-D, CPA.com,
Correct.
and get on his calendar for a discovery call and find out. Well, I mean, I just love the idea about, making sure that you're clear on your wealth plan and then working with Michael to develop the tax strategy, the tax plan on top of it or around it to help you
Yeah.
realize set
Yeah.
wealth plan. So
Yeah.
thanks again, Michael.
Thank you so much. My pleasure and happy to have been on your show.
Likewise, finally, friendly reminder, there's never going to be anybody more interested in your financial success than you are. So act
Yeah.
accordingly.
Yeah. Thank you.